Yeah, I think it's very busy 2 quarters for 2025. We actually, as the largest independent wealth manager, we probably serve around 400,000 clients with 20 years history. So we actually have this tradition. Every quarter, we'll hold some sort of big summit to share the big news, insights, bring out kind of specialists to our clients so they can actually make decisions. And I think the feedback from our clients is, I think at the first half of the quarter, probably in January also, when Trump first got on stage, especially with his many dramatic measurements or ways to actually announce their intention to increase tariff. People have a very brief panicking period, if you will. Many of our clients actually are entrepreneurs that engage in export, import-oriented manufacturing. But after that, I think people are a little bit they're coming down because the relocation or the diversification of supply chain actually started many, many years ago. Many of our clients are prepared for that shock. Once the tariff number actually went beyond 50%, they kind of calm down there. They understand anything beyond 50% is probably not effective. It's more or less a childish battle. So I think tariff-wise, I think our clients are prepared and okayed. But with the recent development in Mideast, I think some of them are actually looking more and spending more time, especially hiring specialists. People like us, people like tax advisors, big four firms, to have them plan out what exactly is their next global headquarter or supply chain headquarter to diversify the supply as well as risk. So I think it's a good wake-up call for people to understand, well, this is probably a new chapter of globalization, not the 40 years we're all used to high growth, peace, everybody's nice sitting on the table. So they understand the tensions, and also, I think they are getting to a stage, they're finding a way to deal with this type of tension on the global side. So in terms of investment sentiment, we're seeing a pretty big shift towards secondary market. In the past, we specialize in alternative investments, especially in primary PE and VC. So out of the $33 billion US AUM that we have, I would say probably at least half goes to primary market. But this year, we're seeing actually at least a 50% growth in terms of secondary market placement, given stocks and some of the structured products is really getting more popular. People are paying attention to which stocks they like, but at the same time, they are putting in a structure to actually protect the bottom side. For example, some of the EV stocks you just mentioned is actually a very hot target for them to place structured products. So both U.S. and Hong Kong market is obviously picking up heat recently. So that actually allows our clients to have more appetite towards not just fundamental and stable yield type of product. They're more excited to get into the the secondary market trades.
What markets do they like?
U.S. market, for our overseas clients, U.S. market actually has this Mag 7, has a lot of drama to it. So for individual clients, it's easy to get their attention. At the same time, recently for Hong Kong market, aside from some of the representative stocks, they are also looking at the indexes. I think in general, the sentiment is much more optimistic than 2 or 3 months ago.
As we're watching all the Trump policy, and it really is coming through thick and fast, we are watching the big, beautiful bill and Section 899, which was a proposal known as the quote-unquote revenge tax. It will make it harder for foreign companies, individuals to be investing into the United States. Now, there is some reports that is going to be removed, but how will that impact sentiment for investors wanting to invest in the U.S.?
Yeah, I think it's like I said, it's a wake-up call for people that they understand or they realize that at the table of the globalization game stage, there are countries more than just U.S. and China. So they're looking at Singapore, they look at Europe. I think that's probably a process that's harder to reverse, because in the past, people only look at China and the U.S. Now people are waking up. Even if I think probably Mr. Trump would do a little bit, retraction in terms of policy or level of aggression, but I think people are more seriously looking at their diversification across the globe. So I believe that's a stage of real globalization. Assets in Europe, assets in South America, probably not used to be the hottest topic in the past, but now people are looking at it at a balanced approach. We're getting inquiries more and more about European products, South America, stuff like that.
What about the Middle East?
Middle East is actually one of the interesting topics. We actually sent a team down there about 2 years ago. We actually had a lot of talk with Dubai, with Abu Dhabi authorities, DIFC. At one point, we're actually thinking of having a branch office there. We're getting so many inquiries that we thought the demand is going to stick. It did not. So people ask about it a lot. When the time to take action, either moving down there, opening up a sub-branch there, opening up an account there, this seems to be hesitant a little bit because majority of our clients are Chinese clients. So I think culture, remoteness, and exactly how much that market will bring to them still remains a question mark. So we're obviously paying still close attention to that area, but I think for at least our type of clients, Chinese small, mid-sized enterprise to directly engage in that market is probably still something willing to see.
We're seeing a lot of IPO activity, especially here in Hong Kong. Now, Premier Li Qiang is calling for supporting consumer names to be listed into the Hong Kong market or for H shares to be relisted as A shares. Are you interested in any of this kind of IPO activity?
Oh, absolutely. Absolutely. Like I said, the primary PE products, AUM, we had is in RMB. So, the exit for the PE to become public, to become, M&A transactions that provide a meaningful and sustainable exit for this type of products, definitely good news for us, for our clients as well. So for many of the recent Hong Kong IPOs are actually one of the some of our portfolio companies. So we're very happy to announce that, we go to the stock market to celebrate with our portfolio companies together.